Hello everyone, George Santos here with a quick review of the market on Monday. I usually do a weekly review and many of you receive an email with an attachment to it. However, today I thought that since we are having a bit of a pullback here, 1.6% on the Dow, etc., that I would do just a quick video. Bear in mind that all the usual disclaimers apply here, not trying to give any particular person investment advice since I'm not an investment advisor. I'm a psychologist and I do this mostly for my own purposes, but it is a YouTube video that anyone can look at it when it's posted on YouTube. So let's start here by looking at the weekly chart of the S&P, and you can see that we had a nice bullish bar here on Friday, on last week rather, because this is a weekly chart. Um, and so there's room at the top. It's not really overbought in terms of the standard deviation yet. But we're getting a bearish engulfing bar here, candlestick here. The candle is engulfing this one so far. I mean, we're just 3/4 of the day through Monday. Now we still have parabolic below the most recent bar, so the weekly chart is still looking pretty bullish. And the only caveat to that is that we still have this bearish divergence of MACD, and we ought not to ignore it, as I've said many times in the past. Um, I am wondering if which outweighs which. Is it the bearish divergence or the sell signal on the 1939.9? I am willing to pause a bit and not jump to sell everything, although I did lighten up last week on some stocks. But I'm willing to wait and see how this indicator, the 1939 MACD, develops. If it starts going down any further, and especially if it turns red and goes below the zero line, then I'll say yes, I think this market is going to decline some more. But as of now, I don't see that occurring. Now, so bullishly, the weekly chart still looks pretty bullish. Nothing much has changed today, in spite of this bar here. Now we are now closing. If we close now, which is about 220, we would be closing between the 4 and the 9. The buy zone that I like to use is between the 9 and the 30. Okay, and we still have the 4 above the 9. Let's look at a daily chart. On the daily chart, we have a different picture, of course, because it's a shorter term. Now, on the daily chart, we did hit on Friday, we hit that 2 standard deviation Bollinger Band. And I mentioned then that since that is the case, that we should not be surprised to see a pullback. And how significant it would be, we really don't know. But right now, we have some very significant bearish bar. It's a bearish engulfing bar. It totally engulfs this one, the body of this bar, totally engulfs this. So that's pretty bearish. And we are closing at this time, the closing price is below the buy zone, below the 9 and the 30. If we close below here, below that 30 weighted moving average, there's reason to be concerned, to be more concerned. And the parabolic is switching so far today to being above the today's bar. So that is a bearish signal too. And MACD, of course, trending down again below the zero line, and we still have a sell signal here on the daily chart for the 1939.9. So there's reason to be cautious here. A lot of reasons to be cautious. Parabolic is negative. We have a bearish engulfing bar. We hit an overbought condition here, hitting the 2 standard deviation line. We have MACD giving us sell signals here. It's remaining on a sell signal here. So we don't know how this thing is going to develop. Let's take a look at QQQ, the NASDAQ. NASDAQ is very similar. This is the daily, but why don't we hit the weekly first? Very similar. So both charts are looking very similar, and we should pay particular attention to this this MACD, this bearish divergence of MACD. So this could be the beginning of a fairly significant pullback. We don't know that yet. Okay. Now here's a daily chart, and what I would be more concerned with here, most concerned with here, is that for the first time in some time, since back here, back in November, does the 1939.9 give us a sell signal, drops below zero and turns red. So that's not good. So what I'm looking at is if we can close between the 9 and the 30, there would be less reason for concern. Okay? If we continue to close below the 30 weighted moving average, more reason to be concerned. If you're asking me what I'm doing, I'm sitting tight. In fact, I bought Tesla. Okay, so I'm not selling everything. I do have some stocks and I'm holding them. I have Alcoa. I have at this time I have IPO. I have IP. I have ADS. I have some Microsoft and PWR. So I'm not selling out. I think there will be some time to be able to do that if we need to. So have a good day, and I hope this doesn't turn out to be a major pullback, but I just thought I wanted to do a quick video to bring you up to date with what I am seeing, and I could be wrong. Thank you for listening.